we're actually in a tough place right now. It's at 108. I see all kinds of kvetching and people worried about it, scared, and who knows, maybe it breaks down to 102. I don't really care. I'm quite confident that this is just a shakeout. We're getting rid of a few of the tourists, and that by the end of the year, we'll be at 140.
Right. But
I don't think this cycle's dead. I don't think this cycle's over. We're kind of right at the power law value for where it ought to be right now, and we tend to go up to a kind of one standard deviation above that. I believe that in this cycle, sometime next year, we'll probably see 180, 200, maybe higher. I don't think we'll see a million in this cycle. And I think off of that, by the way, off of that 180 or 200, when the last people come in and everyone gets all levered up, guess what? We'll probably have a 50% correction and come back, to clean out a lot of people. And that's sad. I mean, I'm very comfortable buying it right here.
Bitcoin is currently trading near $111,000, sparking mixed reactions among investors. Some fear it could tumble toward $12,000, while others see the recent pullback as a healthy shakeout that clears out short-term traders. Despite short-term volatility, confidence remains that Bitcoin could reach $140,000 by year's end, with projections for next year ranging from $180,000 to $200,000 as adoption and market momentum continue to grow. Even if a correction of around 50% follows these highs, a typical response after sharp rallies, the overall cycle still looks strong. At current levels, Bitcoin aligns closely with its power law valuation, suggesting it's fairly priced in this stage of the market. Historical patterns show that such corrections often help reset risk and prepare the ground for further gains. Many long-term holders remain comfortable buying now, betting on future growth rather than reacting to short-term swings. Meanwhile, increasing institutional participation and deeper integration into financial markets reinforce Bitcoin's position as a leading digital asset with a capped supply and unique store of value qualities. These factors support a bullish medium to long-term outlook despite inevitable market fluctuations. In a recent conversation with Michelle McCrory, financial analyst Lawrence Lepard compared Bitcoin's trajectory to gold and discussed the fundamentals that could drive both assets in the years ahead, underscoring why many investors remain optimistic about Bitcoin's role in the evolving global economy. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
If you look at historically when we were on a gold standard, and you don't have to be fully reserved, you don't have to have every dollar backed by an equal amount of gold, but you generally got to be 30 or 40% reserved. We need to be at a gold price of between $20,000 and $90,000 an ounce, and we're at 3,500. So that's how much fiat money we've created. And so, what I think the government would need to do is it would need to say, look, I mean, in my view, what they should do is they should come out and say, look, Keynesianism is broken. Debt's a bad thing. We are going to now create a new dollar. 10 old dollars is worth one new dollar, and one new dollar is exchangeable into gold at X rate. And the government stands ready to buy or sell gold at that rate. And we are now back on the gold standard. And fully convertible, both
fully
ways.
Convertible?
Fully convertible. Yep. Back, well, at the price. Now, it doesn't have to back all the money supply, but the price would then equilibrate to a point at which people trusted the money, right? If they set it too high, everybody would be turning their gold in to get dollars. And if they set it too low, everybody would be buying gold, shoving the price up. And so, the market price of gold would be the new value of the dollar if the dollar is tied to gold. And in turn, the same thing could be said of Bitcoin. I mean, you could just look at Bitcoin as digital gold. It's really the same set of equations. So the problem is nobody knows what the correct price is. And the further problem is that this is an enormous one-time shock and would be highly inflationary. I know that Luke's belief is that what we should do is just run high inflation for a bunch of years until we get debt to GDP under control. And that's an alternative strategy, and that's probably more likely to be what will happen. but the way to get there is to do a reset. I mean, the hard reset is, we go Stephanie Kelton, we just print all the money, and the dollar literally becomes worthless, like it was in Venezuela or Weimar. And at that point in time, people are exchanging silver coins and satoshis to buy and sell goods and services, and the new currency becomes, either silver, gold, or a satoshi. But anyway, there's no doubt there's a lot of gold coming in the United States. And yes, backing the treasury market's the most vulnerable part. And so going and making, the Judy Shelton, let's have a gold-backed treasury offering, does make a lot of sense, and would possibly be a way of maintaining the United States as it is, and with, the dollar as somewhat of a worldwide reserve currency, a worldwide reserve asset. Do keep in mind, though, that if you do that, you're going to basically say to a bondholder, you can get back at the end of the term. I mean, the way Judy wrote it in her book is at the end of the term, you can either get back the dollars or you can get back the gold, whichever is larger in terms of value. Well, if the gold goes up a lot in price and the U.S. is guaranteed to get it back, well, then the U.S. is going to have to go out and buy the gold to give it back to that bondholder, and that's going to be expensive, and that's going to increase the deficit. So, there's really no free lunch here with any of these programs. And I mean, at the core level, Michelle, what should be going on really is people in Washington should have their hair on fire about, we've got to stop spending so much money. We've got to balance the budget. We got this new emerging form of sound money called Bitcoin, and the United States, has more Bitcoin than China, and has within its population a lot of people who have more Bitcoin than the Chinese. And one could argue that if you take Saifedean's point, which is that the soundest money always wins, Bitcoin is sounder than gold from a stock to flow ratio. So, and I think ultimately will become the reserve currency. I mean, we're talking decades now. And I know that, a lot of gold people don't like that. They have a hard time accepting that, but I've certainly made it through the wicket on this. And while I recognize there are risks to Bitcoin, I'm pretty convinced that in the long term, it's the winner here as the basis of sound money. So, and it's interesting because I think that I think there are people in the federal government who understand that and think that as well. We know Moran is a Bitcoin bug. He's tweeted about it. We know Bessent is positive on Bitcoin. Obviously, Trump's son is very positive on Bitcoin. And so, one could make an argument, and it's not a frivolous argument, that when Jason Lowery wrote his book, Soft War, Soft War, that he talked about how Bitcoin would be a sounder form of money than gold, and would be strategically important for countries. That in turn, people have we've thought about, maybe when we do this reset, we reset it on a Bitcoin basis. In my opinion, they are both the two sound money choices. I call gold is analog sound money. Bitcoin is digital sound money. I mean, it's digital. It's digitally scarce, and so and they coexist today. One is outperforming the other. That's Bitcoin is outperforming gold in terms of dollar price, and that's because it's going through an adoption curve cycle, and it's also completely limited in supply. It's totally inelastic. We know how many it's going to be. Whereas the gold supply does grow, and in 40 years there'll be twice as much gold above ground in the world. But they could coexist, and they will coexist. But I also go to kind of the point that Luke Groman made, and it's actually a point that Saylor made, and there can only be one. I mean, at the end, and Saifedean has made this point as well, that history shows that the soundest money always ultimately wins. I mean, and Luke made this point well. There was a time back in the 1800s when silver and gold were both money, and gold for bigger transactions, silver for smaller. But as we all know, there's a lot more silver out there, and the stock to flow on silver is much higher. And so as a result, over time, silver became demonetized. And the countries that bet on silver, most particularly and historically, they were China and India, they really suffered because, interestingly, Britain originally, the pound was originally a pound of silver. And so they originally started off on a silver standard, but they migrated to the gold standard in the early 1800s because they realized it was a better form of money. And so I think, if you're talking 50 years out, I think that, that gold Bitcoin demonetizes gold. But, the rate at which that happens, they can coexist for quite some time, and there'll be a cross price between the two. If you look at that cross price between the two since inception, it's been steadily trending up and to the right in favor of Bitcoin. But, look, Bitcoin's not going to take over tomorrow. I mean, we're still talking about a $2 trillion asset in a sea of $900 trillion of global assets, if you include real estate. So, it's still just a speck on an elephant. It's going to take time for it to flip gold. But it's interesting, people think, well, maybe it's topped out at 100,000. Well, just if it were to flip gold, I mean, the gold market today is about 20 trillion. It's a little bit funny because not all of it's available for sale. Some of it's in museums and antiquities and so forth. But call it 20 trillion. There's 2 trillion in Bitcoin. If Bitcoin in market value to be equal to the gold market, it would need to do a 10x, which would take it to about $1 million. And that's kind of my base case forecast for the next 5 to 7 years. I think in the around 2030, maybe early 2031 or two, Bitcoin will be at $1 million, which is up 10x from where it is today. And at that point in time, the Bitcoin market and the gold market, now gold will have grown as well, probably in value, because I think gold, at 3,500 a day, and I think gold's going to 10,000. But the point is that at some point, I think the lines will cross.
During the gold standard era, only about 30-40% of the money supply needed to be backed by gold, a sharp contrast to today, where gold's dollar price is far below what some believe it should be. Some analysts speculate the government could attempt a monetary reset by introducing a new dollar tied to gold at a fixed exchange rate to rebuild trust in the currency, though setting that rate is tricky. If it's too high or too low, people would rush to swap gold for dollars or vice versa, threatening stability. Bitcoin, often called digital gold, shares gold's core traits of scarcity and value, but its role as a potential global reserve asset is still developing over decades. While both gold and Bitcoin currently serve as forms of sound money, history suggests one typically dominates in the long run, and Bitcoin's rapid growth may see it surpass gold by 2030, 2031. This shift reflects an evolution from analog to digital sound money, with Bitcoin's fixed supply giving it a unique advantage over time.
Now, what if you think about it in terms of which is going to store value better? And so if we bet on Bitcoin and Bitcoin goes up 10x and they bet on gold and gold goes up 3x, I mean, there'll always be a cross rate. No matter which one you bet on, you can always cross it over into the other. I mean, if you have gold, you can sell it and buy Bitcoin. If you have Bitcoin, you can sell it and buy gold. And, when you see a process of demonetization taking place, what happens is, one currency suffers vis-a-vis the other currency. And so if Bitcoin and gold are the two sound money currencies and all the other countries want to bet on gold, let them. I mean, that's fine. And if they say you got to pay me in gold, we'll say, fine, we'll pay you in gold. We'll just take our Bitcoin, convert it into gold and pay you. But guess what? Every year, the value of what we own goes up more than the value of what you own. So how do you feel about that, guys?
But value is subjective, right?
It is.
The value of Bitcoin is only determined by the demand for Bitcoin, right? It's only determined by the global consensus that people want Bitcoin, and the same for gold. All is determined by demand.
So totally,
consensus.
Totally value is subjective, and those central banks have bet on gold, but how they've been doing so far. I mean, Bitcoin has absolutely crushed gold. I mean, I could show you some charts. This is the Bitcoin versus gold and the S&P, IRRs historically looking backwards, right? I mean, 1 year Bitcoin's up 91%, gold's up 35%, and gold's having a fabulous year, right? And S&P's up 15%. And this is real time. I mean, you look back and Bitcoin is just crushing gold. And I think the reason is, if you look at the monetary properties of these two things, Bitcoin is superior. I mean, one of the things about Bitcoin that I think people really have a hard time wrapping their head around, Michelle, is the idea that there's a fixed supply of these. I mean, it's a perfectly inelastic commodity. Every other commodity, I'll stop the share here. Every other commodity in the world, if the price of it goes up, that we will create more of it. Oil goes up, we'll drill more places. Gold goes up, we'll mine more mines, etc. Bitcoin, we know there are only 21 million. There will only ever be 21 million. And I think that's why a lot of people are missing, what's happening with the price on this thing and how, Saylor's right when he says it's going up forever, Laura. I mean, I was at a gold show. I was at the New Orleans Gold Conference a year ago. And I said, guys, this is going to 1 million and then it's going to 10 million. And I heard guffaws and laughs and everyone thought I was nuts. But it's going to happen. I mean, unless something changes. I mean, unless adoption slows or there's some technical problem that I'm unaware of. And, it's going to happen because it's a trend in motion and the dogs are eating this food and more dogs are eating it as time goes by. And, it's superior in its qualities to gold. It's cheaper to store, it's easier to move, it's easier to verify, and it's limited in supply. It's like, okay, so why do I need gold? Because the Chinese and the Indians have it. Well, maybe they're not the smartest guys in the room. By the way, I do think that the Chinese are probably stockpiling Bitcoin on the side, maybe quietly, or mining it on the side quietly. I'm almost positive the Russians are, based on the hash that we see coming out of Russia. So, I think it's really going to emerge as the alternative to gold for sound money. But that's hard. That's hard to see, and some gold people don't like to hear that. And don't get me wrong. I mean, there was no bigger gold advocate than I before Bitcoin came along, and even I was quite skeptical of Bitcoin. It took me years to get to where I am right now. But, having observed it and watched it and studied it carefully, I'm now quite convinced that it's going to win. We're actually in a tough place right now. It's at 108. I see all kinds of kvetching and people worried about it, scared, and who knows, maybe it breaks down to 102. I don't really care. I'm quite confident that this is just a shakeout. We're getting rid of a few of the tourists, and that by the end of the year, we'll be at 140.
Right.
I don't think this cycle's dead. I don't think this cycle's over. We're kind of right at the power law value for where it ought to be right now, and we tend to go up to a kind of one standard deviation above that. I believe that in this cycle, sometime next year, we'll probably see 180, 200, maybe higher. I don't think we'll see a million in the cycle. And I think off of that 180 or 200, when the last people come in and everyone gets all levered up, guess what? We'll probably have a 50% correction and come back, to clean out a lot of people. And that's sad. I mean, I'm very comfortable buying it right here at 200. I might slow my buying down a little bit, expecting a correction. I mean, things zigzag.
Your 5-year targets, you have a target.
My 5-year target for Bitcoin's $1 million easily, I think.
And you have a 10-year target as well.
My 10-year target, probably 3 to 10. I mean, I don't know. It kind of depends on if we get hyper Bitcoinization or not. See, the tough thing about these targets, Michelle, is that it depends a lot on the policy responses of the government. Sure. It depends on. I mean, look, I wrote this book and I called it The Big Print, and I don't want to look like an idiot, and I really hope they do a big print within 5 years. I'm pretty sure mathematically they have to, and if they do, maybe I'll get a wider readership and people say, hey, that guy was smart, but there's some possibility they can kick the can for 5 years. I don't see it. But, I've been wrong before, and I could be again. So a lot of it depends on the policy responses. But, let's shift over to gold, because I think gold is even more interesting. So we're at 3,500. I think we're at 4,000. We're at between 4,000 and 5,000 by the end of the year. We are really in the accelerating and exciting part of the silver and gold market, right? So silver's at 40. I think it'll take out 50 this year. And I think, in a 2-year window, probably gold's heading between 7 and 10, and silver's heading to 100 plus. In a 2-year, if you give me a 2-year window, and that's because what's going on is, you got to remember, there still aren't that many people here. You're a sound money person. I'm a sound money person. We're in this little echo chamber. I've sold 40,000 books. Well, there are 330 million Americans who have no clue what the hell's going on. And wait until they wake up, and the inflation just keeps persisting. Look at the stock market, for example. Gold stock ETFs have been losing dollars. It's amazing. Gold, the GDXJ is up 70% year to date. My fund is the same or better, and yet they are losing dollars.
Lawrence Lepard explained that when comparing Bitcoin and gold as stores of value, there's always a process of demonetization where one tends to weaken relative to the other. Bitcoin has dramatically outperformed gold in recent years, with its price gains often eclipsing those of the yellow metal. Its fixed supply of 21 million coins makes it fundamentally different from commodities like gold, whose supply can expand as prices rise. This absolute scarcity gives Bitcoin the potential for long-term stability and growth, setting it apart as a modern alternative to traditional stores of value. He noted that Bitcoin is easier to store, transfer, and verify than gold, which gives it practical advantages. Lepard shared that he once predicted Bitcoin could reach $1 million, a view initially dismissed by many, but one he still supports based on its adoption curve and unique properties. While some nations remain loyal to gold, he suggested countries such as China and Russia may already be quietly accumulating Bitcoin, positioning themselves for a shift in global monetary dynamic. Looking ahead, Lepard forecasts that Bitcoin could hit the $1 million mark within the next 5 years, depending on government policies and responses to inflation. Meanwhile, gold, currently around $3,500, could rise to $4,000, $5,000, with silver also expected to gain as inflation pressures persist. He emphasized that while gold stocks have been climbing, their dollar value can fluctuate, reflecting the complex forces investors face. As we wrap up, which would you choose as your store of value for the next decade? Bitcoin or gold? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.